All right, weekly update. This week was hard. I'm not gonna lie to you guys. I got some good things going. It's dark outside, as you can see, because I have been going nonstop all week, leaving early in the morning and coming back after it gets dark, which is fine. Like it just happens sometimes in life where you just have that kind of a week. And that was this week for me. I have a lot of pieces moving that just take a lot of time, and they took a lot out of me this week because I'm trying to prepare in the best possible way to get a finance and investment job, which has just been really hard. I've applied to lots of them. No one's gotten back to me. They've all ghosted me, and the ones who haven't have said no. And it's tough. And I know some other people are dealing with that, so I'm not saying woe is me, this is only a me problem, but it's hard. It's really hard. And my heart goes out to the people who are experiencing that themselves, and just know that you're not alone and that I get it. In fact, if you are listening to this video, tell me a little bit about what you're struggling with, like how the job hunt is for you, what's going on. Let's talk. Hopefully I can help provide a little bit of reprieve for you guys, or we can talk it out together and kind of be brothers in arms, sisters in arms in what we're going through. Anyway, that's actually not the full reason why I want to do this video. I'm doing a combination video today with actually something I was going to do for the newsletter, and I just hadn't got around to it because I couldn't find enough data to make a robust video out of it. So I'm going to do it quickly here. And so consider this a transition. If you are sticking around to talk about the market stuff, you might have noticed that the stock market's been crazy this last week. US markets in general, the bond market, everything. And it seems like other areas in the world are going the same direction, at least from what I've heard. And I'm sure a lot of people are wondering what the heck is going on. You know, you hear tariffs in the news, and you hear this, that, and the other thing. Consumer spending is falling. People are worried about higher prices. There's lots of reasons to be anxious and nervous right now. Now, none of this is financial advice. Just getting that out of the way. If you are concerned about your finances, or you want to pick up investing, you're looking to do something with your money, please go talk to a licensed professional. But I have been looking at this a lot. I spend all my free time doing this. And not only that, it's what my degree path's in, and I write 2 articles a week. So I'm constantly looking at financial data. And there's one thing that I see, and I've heard a few other people talk about on YouTube, and almost none of the corporate media is talking about it. But I think it provides an interesting perspective to what's going on here. I'll get to that in a second. Let's be honest. The real reason, at least from what I can see, as to why we're seeing things like Nvidia dropping like crazy, or the stock market going down in general, is everything's just overpriced. If you look at stocks today, we are seeing multiples higher than ever before in many, many cases. And when stocks are at an all-time high, people get nervous because they start to wonder, is a correction coming around the corner? And also, you know, prices are higher than they've been in a long time. Inflation is higher than it's been in a long time. And so people are just nervous that this whole system is going to come crashing down. And it may. But anyway, I'm not here to scare you or anything like that. It's just the main reason from what I see is that everything's overpriced. However, this I think is worth knowing about because no one's talking about it. And it's really these two things. When you look back at inflows versus outflows into the stock market this last year, institutional investors, so the ones with lots of money, machine traders, the BlackRocks of the world, were net sellers. They sold far more than they bought. And we see this in very stark examples like Warren Buffett, Berkshire Hathaway has a higher cash reserve than they've had ever, I think is the number that I was looking at. On the flip side of that, though, retail investors made up $265 billion of net inflows into the stock market in 2024. What does that mean in plain English? We are seeing more retail investors enter the market as institutional investors leave. Now, you might be saying, isn't that a good thing? That means more people are trading stock. It's more of a democratized system. It's not just a couple funds running everything. And that's all very true. And I loved seeing the wave of new retail investors post-COVID when everyone hopped on Robinhood and they're all hanging out in Wall Street bets for what it's worth. However, it's important to remember one very, very important thing. And that is the institutional investors are old hands in this game. They have been around the block. They have seen the 2008s and the dot-com bubbles, and they've seen the market corrections. So they know what's a disaster and what's just noise. And a lot of us as retail investors, myself included, just don't. We don't have the experience to know that. And so what happens when you have a whole bunch of people who are rather new to the game of investing and they see stocks start to go down, they start seeing bigger and bigger candles, they panic. And you see tons of panic selling, you see panic buying, and so you see more volatility. Us as retail investors on average are not super rational. And that's okay. You know, most people, if they have a good, solid financial understanding, they do all right for themselves in the end. But we're not looking as deeply as the institutional traders are, and we're not acting as rational. Now, sometimes that can be flipped, but in this case, I believe that's what's going on. And so you're going to see more irrational behavior, irrational sell-offs, tons of people buying an illiquid stock, whatever it happens to be. So why am I saying this? Well, first off, it's to explain all the crazy up and down that we've been seeing, at least in part. But two, there's a lesson here. If you can practice not folding when the market comes to a small downturn, you have the chance to beat out all the noise and win out on this. Again, this is not investment advice. Please do not do this without talking to someone who is professionally licensed to do this and with your information. However, it works. You know, I did this myself. Now, I don't have a whole ton of money to throw around in the stock market right now, but I do have a paper trading account, a trade simulator that I use from time to time just to test things. And last week, I shorted NVIDIA. And the reason I did that was because AI has not, at least on the application level, the LLMs and the actual AI models, haven't really been able to turn a profit. I remembered reading fairly recently, like 4 or 5 months ago, that ChatGPT's Pro model is losing money on every user that subscribes. Satya Nadella the other day, Microsoft CEO, said that there's likely going to be an overbuild in AI infrastructure in the model case. I've heard several CEOs earlier this year talk about how the models are quickly becoming commoditized. And so all of this capital expenditure that's going to build these bigger and bigger models probably is on the wrong side of the bet. And so I shorted them. It was last Tuesday, S3 was on Fox News, CNN? Anyway, they were on one of the news channels talking about how NVIDIA was going to plummet. And they did the day after for a little while. They ended up higher that day. They ended up 3% higher, but I shorted them because in my head I was like, now that this is here, we're just gonna break. And it did for most of the morning. But I panicked because it did this before it dropped. And so even though overnight that paper trade was up $185, I folded because I saw it going the other direction and I panicked. And because of that, I lost out on additional gain that I could have got. So that's what I mean. You know, if we as investors can take a minute and we can really understand, even if it's one stock or a couple stocks, where we know what the fundamentals look like, we know how this thing is supposed to be priced, and we can really hold on to that and just hold course, whatever the action is that we think is the right move, and we can just hold through the noise, we're going to come out on top. That's what I wanted to say today. And like I said, I wish I had some graphs because I like showing you the proof, but I will add some of the sources I looked at into the comments so that you can see it. Anyway, what are your hot trades? Let's go with that. In the comments, I want to know what stocks or market trends are you looking at where you know it that everyone else is on the wrong side of the bet. I'm curious. Don't worry, I won't steal your trades. I don't have the time to do that right now. So, but let me know. I'm curious to have what you have to say. Anyway, that's it for this week. Thank you all so much, and I will see you all next week.